Have you ever looked at a stock chart and felt completely lost? Like you're staring at some ancient alien language? Yeah, we've all been there. Well, today, we're going to crack that code. We're going to learn to read the visual language of the market and start seeing the real stories hidden inside all those lines and colors. Let's dive in.
So, let's kick things off with a question. Why can't a simple line chart, the kind we've all seen since grade school, tell you the full story of a stock's trading day? I mean, they're fine for a quick glance at a trend, right? But for stocks, that simple line is hiding so much. It's like reading just the headline of an article and missing the entire dramatic story of the day's battle between buyers and sellers.
Believe it or not, the entire story of any trading period, I don't care if it's a whole month or just 5 minutes, it all boils down to just 4 key pieces of information. Just 4. These 4 numbers are literally the DNA, the building blocks for everything else we're going to talk about.
And those 4 numbers are the open, the high, the low, and the close. You'll see it abbreviated as OHLC all the time. Now here's the real problem, the big challenge. How do you show all 4 of these things for every single day on a chart without it just turning into a giant confusing mess? I mean, think about it. A full year of daily trading. You'd have to visualize over 1,000 data points. Good luck with that.
Okay, so the very first attempt to solve this was, you guessed it, the good old line chart. Super simple, clean, and you can see the basic idea in about 2 seconds.
So how does a line chart work? Well, it just plays connect the dots with the closing price of each day. It's great for seeing the general direction, sure, but that simplicity, that's also its biggest weakness. You're totally missing the juicy details, the intraday drama, the fight between buyers and sellers that created the high and the low. It's like you're missing 3/4 of the movie.
Right, so traders obviously needed something better. And that brings us to the next step in the evolution, the bar chart. This was a pretty big leap forward, actually, because it figured out a way to cram all 4 of those OHLC data points into one little symbol.
But here's the trade-off, and it's a big one. The line chart, super simple, but data poor. The bar chart, it's got all the data, but man, is it ugly and hard to read. Seriously, try looking at a screen full of those little bars and spotting a meaningful pattern. It's a nightmare. It's functional, yeah, but it just doesn't speak to you. It doesn't tell that story we're looking for. So that leaves us with the million-dollar question, right? Is there a way to have our cake and eat it too? To get all the data we need, but in a design that's actually clear, intuitive, and something our brains can understand in a split second?
Well, the answer is a huge yes, and you'll never guess where it came from. Not from some Silicon Valley supercomputer, but from 18th century Japan. It's an absolutely brilliant, elegant solution that was originally invented to track the rice market, and it's called the Japanese candlestick chart.
I mean, just think about this history for a second. We have a Japanese rice merchant, a guy named Homa Munehisa, who creates this incredible system way back in the 1700s to get a read on market psychology. And for almost 2 centuries, this amazing tool was basically a secret, hidden away in Japan. It literally wasn't until the 1980s that a Western trader named Steve Neeson stumbled upon it and brought it to the rest of the world. Wild, right?
And that quote really puts it in perspective. This tool, which is now the absolute standard for pretty much every trader on the planet, is actually a pretty recent arrival in the West. Before the late 80s, maybe early 90s, most folks trading in New York or London had never even seen one.
Okay, so what is all the fuss about? What makes these candles so special? Let's get right into it and break one down piece by piece. Once you get this part, I promise you'll be able to look at any candlestick chart and know what's going on.
All right, first up, the bullish candle. You'll usually see it colored green, maybe white, and the rule is dead simple. If the closing price is higher than the opening price, it's a bullish candle. That's it. It means that for that period, the buyers were in control. They won the fight and pushed the price up. Let's walk through this one together. So, the stock opens at 62, and it closes at 67. Since it closed higher, that space between 62 and 67 becomes the thick part of the candle, what we call the real body. But of course, the price didn't just move in a straight line. During the day, sellers managed to push it all the way down to 58. That little line at the bottom is the lower shadow. And the buyers, they went on a run, pushing it all the way up to a high of 70 before it came back down to close. That thin line at the top, that's the upper shadow. See, the entire story of the day's tug of war is right there in one simple shape. Okay, now for the flip side, the bearish candle. This one's usually red or sometimes black. And you guessed it, the rule is the exact opposite. If the closing price is lower than the opening price, you've got a bearish candle.
This time, the sellers won the battle and drove the price down.
Let's trace this day's drama. The stock opens way up at 456. The buyers give it a shot, pushing it to a high of 470. That's our upper shadow. But then, the sellers just take over completely. They slam the price down way past the open, all the way to a low of 420. That's our lower shadow. It bounces back a little to close at 435, but the damage is done. That whole range from the open at 456 down to the close at 435, that's our big red real body. No question about it, the sellers were in charge here.
And this is where the real magic happens. You barely even need to read the numbers. The shape tells you the story. You see a big, long candle body? That's shouting at you that there was strong conviction, a decisive victory for either the buyers or the sellers. But if you see a tiny, short little body, that whispers indecision. It tells you things were quiet, or maybe that the buyers and sellers fought to a draw.
Okay, so we can read one candle. That's awesome. But what happens when you string hundreds of them together on a real chart? Well, that's where the idea of time frames becomes absolutely critical.
This is what's so cool. It's totally scalable. One single candle can represent a whole month, a week, a day, or just 5 minutes of trading. And check out the difference that makes. If you look at a year using monthly candles, you're only looking at 12 candles. Easy enough. But if you zoom all the way in to a 5-minute chart for that same year, you're suddenly looking at almost 19,000 candles. That's a lot of data.
And that right there is the core challenge for any trader. When you're staring at that mountain of data, how in the world do you separate the important stuff, what we call information or the signal, from all the meaningless random little ticks up and down? That random stuff, that's what traders call noise.
So the best way to think about it is this. Your time frame is your noise-canceling filter. If you're a long-term investor, looking at a daily chart gives you meaningful patterns. That's pure information. But if you're looking at the 1-minute chart, all that chaotic bouncing around is probably just noise that's going to make you panic and make a bad decision. Choosing the right filter, the right time frame, is everything.
All right, let's wrap this up with the key points. 1. All stock charts are trying to show you 4 things: open, high, low, close. 2. Candlesticks are the best way to do it because they're packed with data and tell a visual story. 3. Super simple rule. If the close is higher than the open, it's bullish. If it's lower, it's bearish. And finally, 4. You have to pick the right time frame to filter out the noise and see the real information.
So there you have it. You now hold the basic key to understanding the language of pretty much any market on Earth. Right now, those charts are telling incredible stories about human emotion, about fear, greed, hope, and opportunity. So the only question left is, what stories are you going to find?